Step 1. You somehow gain control over at least 51% of the national treasury. Step 2. You print a lot of US dollars. Step 3. You go to Europe to an exchange in Switzerland and you cash $300 million worth of euros. Sounds like a fast scenario, right? However, in the cryptocurrency world, this happened. Time to find out all about it. Welcome to Threat Talks. My name is Jan Koning, and here from headquarters of Onto-It, we bring you Threat Talks, a deep dive, and the subject of today is the Binance BNB Chain Attack. Let's get on to it. Welcome to Threat Talks. Let's delve deep into the dynamic world of cybersecurity. Let me first introduce my two guests of today. Luca Cipriano, he is at night hacker, at day threat intel specialist for Onto-It, and Jeroen Scheerder, and it's hard to describe him, but employee number 0, of course we start there, and knows everything about encryption, wrote a book on a lot of protocols and everything, so we kind of need him today because this is a complicated subject. Gentlemen, welcome. In cryptocurrency, blockchain is a thing, right? Let's first explain to our viewers, hopefully in layman's terms, what is actually is. Jeroen, could you do us that favor?
I'll try, and I'll try to keep it simple, but I can't get around to using a few concepts. So, blockchain is a distributed ledger. A ledger is a way of keeping score that bankers use and so on. It's mostly used in finance. And the key notion is the transaction. A transaction has an integrity part. And so we use mathematical methods, cryptographic methods, public-private key encryption to do the usual stuff there. But the essential additional step in blockchain is that you publish transactions and you link them. So one transaction signs off to another, so you get a proof of a chain of transactions. You record these in things called so-called Merkle trees, and you publish your transactions so that there's a consensus about accepting transactions. So consensus is that you have a number of participants, an acceptance rate.
So, for example, 51% of the network accept the transaction.
So that would be a majority rule, which is pretty common in these things. Yes. So distributed ledger of transactions using mathematical cryptographic notions to ensure three things: integrity, authenticity, but also in this case non-repudiation. So you need to actually trace that transaction to
So it's much like in the analog world, like a notary, but just without the single instance, the single party that has to do that. Like it's not a central authority, but it's a distributed notary.
Yes, the responsibilities of the notary actually pretty much coincide with the things you need to do to have this system work. So being able to validate transactions, and also in the case of a notary, for example, if I sell you my house, the notary has to make sure that I didn't sell it at the same time to another person as well. So that kind of things is part of.
They do.
So and this system uses well-known mathematical techniques used commonly in cryptography for the last 150 years or so, and these things tend to be complex but not impossible. But the added complexity here, of course, is the distribution. And we should always be aware that the mathematics may be simple, but software is hard.
Maybe simple, which is not, but...
By the way...
relatively simple.
Relatively simple.
We do have...
For him, it's simple, for sure.
Yes, of course. That's why we hired him.
Exactly. Mathematics is hard. It's an elaborate building, layered. But in the end, we understand it, and it's solid and rigid and pure and clear, and it works. Yeah. But software is muddy and dirty. And implementations, usually... they're not as reliable as the mathematics.
Indeed.
In the show notes, we do provide infographics that tell you more about this hack, by the way. So you want to read along, certainly possible. Go to threat-talks.com and you'll find them there. So Luca, given blockchain, we're talking about Binance. Can you explain a little bit what's this hack? Because they got a lot of money that they got out.
Yeah. So first of all, Binance is one of those centralized exchange. So as Jeroen mentioned before, like the blockchain is decentralized, but there are kind of, we can call them authorities, although they're not really like centralized authorities. But if you, for example, want to exchange your cryptocurrency to a fiat currency like the US dollar or the euros, you go through this exchange, and then you can exchange them currency per currency or currency per fiat currency. So you can just then put it on your normal bank. So
it's a bit like the exchange agencies that you find at the borders of, if you want to exchange US dollar to pesos or US dollar to euros. In the old days, you would do it physically. It's a bit like that.
Yeah,
I have one
similar.
currency, want to change to something else, and that could be real money, as we know.
Real money, yes, indeed.
And also very real digital money.
Yeah,
that's the purpose of these exchanges.
That is the purpose of these exchanges.
That cannot be decentralized then.
Well, if you want to change it to fiat currency, not. But if you want to, there are ways to do it peer-to-peer. So like I give you the coins and you give me your euros, and we do it on a peer-to-peer basis. So it is not really kind of decentralized, but yeah, it is kind of centralized if you want to do it with a bank and an exchange like Binance. So aside from the blockchain, this concept of blockchain developed. So nowadays is not only about exchanging coins, but they created some blockchains that are able to run programs and codes, which are called smart contracts. So there's like an additional layer that allows you to, for example, move those coins only when certain things happen. So it's a program. You can have an algorithm that does different things.
Like you say to your notary, hey, if I die of natural causes, then this happens, and if I get murdered, this, and if it's a car accident in that specific case, do this.
Exactly. But you don't have a notary. You have a code that is deposited online.
You wrote the transaction,
which is accessible to everybody, so everybody can read it and assess it if it's correct, if they have the knowledge, and then things will happen. Why am I explaining this now? That adds a layer of complexity. Is because the Binance decided to create their own blockchain, which can host code as well. So they have their coins, which is called BNB, which is on a network called BEP2. And that is for financial transaction only. And then they created a new network, which is called BSC. A new coin that is called BSC on a network called BEP20. And that's where they can host these codes. So they can create decentralized application. And it creates also a way to create decentralized finance.
I propose we supply in the show notes an LOA, a list of abbreviations. Please.
Yeah. Yes, we will give some extra information. So this is I quickly explain this because the what is important here in this hack is that you have two different networks, and you can't send one coin to the other network because they don't communicate with each other. But in order to solve this problem, and this happens with all the coins, they created something that is called cross-chain bridges. So there are some kind of hub that facilitates the, if for example, I want to move my BNB that are in that network to this other network, then I can basically start a transaction in this hub. And this hub is like the blockchain. They just communicate with each other, and they will say, hey, you moved 20 from here to there, and it's gonna basically take 20 from one network and add 20 to the other network.
Yeah,
and
so you need to bridge to go from one currency to the other currency.
Yes, exactly. Yeah. And that keeps the balance. And that can be done in different ways. They can just keep it and adding it with pools of people that put money, or they can just simply burn the coins, destroy them, and create the coins. It can be done in different ways. So what they exploited in this case It was an application of the Merkle trees, as Jeroen probably can explain better this part, because he has more knowledge on what went wrong. But what they did, they managed to pretend that they moved coins from one network to the other, but they didn't move anything. They just created coins on the other network.
Okay. Yeah. So you give out the new currency that you want to, but you do not take in the old one. So you end up with both. That's what happened.
Well, you don't. It's like if me and Jeroen are the two networks, and you're the intermediary, and I need to put 20 to Jeroen. I don't give you the 20, and you just create the 20 on your own. So without me giving it out. So you're just basically printing money without they actually existing.
And the modified Merkle tree is actually an existing Merkle tree, which does not validate that transaction, of course, but you insert a path in that data structure that validates that transaction. So you have a proof chain, except that it's fake. And it should have been ignored by the validator. That's the point, right?
Yeah, indeed.
You lost me.
Right. So,
we said that it was not going to be easy, yeah?
but it's actually relatively simple. I have a $20 billet here, and you have a scanner. And the scanner checks a watermark on that dollar billet. Since I printed that billet myself, it will not validate, except I can use invisible ink and a stamp to do a fake watermark. And of course, your scanner should not have reacted to that invisible ink.
Yeah, so you've used the Merkle tree.
So you have an error in your checking procedure. It reacts on invisible ink.
I try to get.
And so I got you to accept my fake $20 bill. Yay me!
And what piece of those chains did you then inject into? That is the bridge one, the bridge algorithm.
So basically, in that part of the network, you have a lot of validators. So they're called relay as well, and everybody can just start a relay. At that time, they could start it by using 100 BNB. The BNB price was like $300 each one, so it was a bit expensive. But using 100 BNB, I could start my node that validates the transaction, and they injected it in. They created a rogue node that was controlled by the attacker, and they injected the exploit in this node that then it broadcasted to the whole network.
This is the bit where you, when you do a transaction, you broadcast it, and you broadcast your proof of transaction, and the data structure is Merkle trees, and they inserted a fake branches into that Merkle tree.
And this is the branch of the target currency then?
Yes. So basically, the Merkle tree always creates two branches, and only one should be validated. The other one should be ignored. But due to the error in the implementation, they were validating both. And the one that was supposed to be discarded actually contained the tampered data.
Yeah, and the software that you're talking about that has to validate the Merkle tree, that was on the network, the ledger of the target currency that that was given out. So in my initial example, the euros.
It's in the implemented. This is everything that is from Binance, so BNB and BSC. So it's in the implementation that they made in the cross-chain bridge.
Oh, in the cross-chain bridge.
Yeah,
okay. So the cross-chain bridge that is supposed to take one currency, give out the other one.
Yeah,
that was injected. Other people were adding their capacity, their nodes for validation into that network.
And one of the relay that was supposed to add, like the blockchain works, was the one with the tampered data.
So this is your notary. I offer a house for sale. The notary has to check that it's my house to sell. I offered a fake proof of ownership to that notary, and he let me sell that house that I didn't have.
Mm-hmm. Because the notary doesn't know how to check properly.
Yeah, or the procedures of the notary were wrong.
Yes,
right.
Not implemented
just check
correctly.
more things, and you knew about the procedures, and you tricked them in such a way that it didn't come into sight of them. Yeah.
Yes. So then, at this point, they have a lot of these coins that are not existing, that are they are existing, but they're not legitimate. And what they did, they used a different decentralized application because with the decentralized finance, you can use coins for as a lending. You have lending protocol. So I give you 200 BNB and then I borrow another coin, for example. So they use those coins to borrow other coins and then they move them around to other networks. And that's how they manage to get the currency out. And of course, then they use a lot of different burner wallets, and so that it's more difficult to retrieve.
But that's all just obfuscation, right?
That's just obfuscation,
it's the
indeed.
creation of the rogue creation that is the actual issue here, right?
Yeah, indeed. That was the actual issue.
Yeah, and then you need to put your newly acquired capital, move it away as soon as possible, get real currency in exchange for it. Before
as soon as possible, indeed, because they didn't manage to move everything, because they tried to move 1 million of those coins to a decentralized application which calls PancakeSwap. But this is the cool part, I think, about the blockchain, that it is anonymous, because nobody knows which one is your wallet and who belongs the wallet to until you don't place a name or you don't disclose it yourself. But everybody can check the transaction. So I know that wallet made that transaction because it's public for everybody, but I don't know who owns that wallet. And well, the community saw that there were huge transactions of like 1 million coins, which were a lot, it's $300 million. And they assumed that it was Binance itself doing something. So they started to post on Twitter, hey, Binance is selling a lot of coins, what is happening? And then, of course, Binance picked it up on Twitter, and there was not their wallet, one of their wallets. And then they halted the transaction, so they managed to stop, so the attacker managed to get only half of the money. So
they could detect it, that there was a lot of money going out of the system?
The community, yes.
The community did so, and then
did.
they stopped the whole, put the Federal Reserve to stop.
Yeah,
basically.
as soon as the Binance realized, hey, that's something wrong, they could halt the network, because this is not actual decentralized finance, but it's more from Binance. So
on a side note, can't we follow the money here? Why can't
you can.
We can.
You can. You
so
can follow
we
the
know
money.
who stole it.
No, you can't.
Exactly.
Well, I mean, you can, but you can't. So there are a lot of ways to obfuscate that. There's a lot of services, like one was called Tornado Cash, that was invented in the Netherlands, that was by a Dutch guy, which had a lot of problems for that as well with the law. But that's it mixes a lot of transaction, and it helps losing tracks of that.
Yeah. So the idea there of this kind of application is there's like 20 people selling, 20 people buying. You all put them in one big pile, and then the individual transfer is no longer traceable.
Yeah,
right. It's a huge pile of.
You add a lot of layers, so that's really difficult to follow everything.
Difficult or impossible?
Well, and
almost impossible.
And essentially, transactions are not linked to individuals. So the proof of the validity of the transaction has no person relatable data.
No, but until you see that I mean, if there's a Bitcoin going in the ledger, and then it gets to another coin and another coin and then $2, and it's taken out of an ATM somewhere, then there's person.
If they do that, but you don't have to do that, because nowadays you can buy stuff on the almost everywhere with.
Okay, but then I
crypto.
buy my new game PC on Amazon, and that sends it to a net address.
I don't think they buy that. Probably they go on the dark web. They buy other stuff like malware or like data to scam other people, all this kind of things.
Yeah, but eventually you want to improve your life as a hacker, right? So you want to buy a car or
so
go on holiday.
You use a blockchain currency to order pizza and it gets delivered to your house.
Yeah, but then exactly. Yeah.
In the end, you do exist, and there are real world traces of your activities, but you cannot tell by the transactions themselves. It's pretty much like getting coffee from a machine that accepts coins. The machine will check the coins that you insert, but can't tell by the coins who's inserting them.
Mm-hmm. Yeah. So it's if you're a bad guy, it's a good way to make your money then.
Yeah, well, it's a possibility. You can do that, and there are also services and like cryptocurrencies that are specific for anonymities. So if you are really good at losing your track, it's really difficult then to trace back some of the.
Now
coins.
I am a average person interested in those cryptocurrency. What's your advice? Don't use it at all. go for a legitimate one? What's your idea on this?
I will start because I know probably your advice. My advice is just study what you're doing, try to learn where you're putting your money and understand how it works, and then do it only if you agree
and don't put your life
understand that, and don't put your life savings. Always put a percentage that you can afford to lose. So it's not
like a casino almost.
Like kind of like a casino. Yes.
Or penny stock.
What's your
well,
your
I like to zoom out. Of course, these financial games and gamblings, they're fun in some sense. And if you have the money to lose and you like playing games, then by all means do. But we are boiling the oceans, of course. So, and this it adds no value. It adds no actual worthwhile functionality, in my view. And we have a sustainability problem first and foremost. So actually upping ocean temperature for frivolous games is at this point in history, I think not the wisest thing to do.
So what you mean is it costs a lot of CPU power to do so, and there's no real stuff added or real lives improved.
It's an immense energy consumer.
I just want to like for example, Bitcoin.
Different coins have different research footprints, of
because
course.
Now they have also proof of stake, which does not consume electricity anymore, is a different way, but it's too complex. People can research it if they're interested in it.
My point would be they're all above zero.
Yes, they're all above zero.
And anything over zero is bad.
Yeah.
And what about initiatives by the central banks of United States, Europe, China to get into cryptocurrency, to have a digital euro, digital US dollar? Should we not do that then?
Well, I think we will descend into a political discussion here. But in my view, the initiative from the digital currency in the EU, for example, is a way to regain government control over capital creation, of money creation. We somehow outsourced that to private commercial companies, because, and this of course has nothing to do with Bitcoin, but the money that we view as real money is of course fake money as well, and it gets created arbitrarily. It gets pulled out of thin air when banks loan you money. They just create an entry on their ledger. And this money creation mechanism is unsupervised, unregulated. And
the digital one, you mean?
No,
the real one.
The real one too. Yeah.
All money is digital, right? It's just a number on your bank account. That's your money.
In the past, we used to peg the fiat currency to the gold, but that does not happen anymore. So
I think we dropped that about a century ago. Of course, we anchored money to gold reserves and so forth. We don't do that anymore because that somehow did not support our idea that we should have unlimited growth unrelated to the availability of natural resources. Yeah. Not enough gold or other things.
Which created inflation, by the way. But
yes, of course. So, but the effort of some governmental agencies to have a digital currency is just to regain control over money creation at all. And if the goals are to have a payment system that offers the same advantages that we have in using actually physical money, so it's we need to be concerned with things like the personal sphere, so privacy concerns. We do not want government control on what we do with our resources for some or other reason. So transactions in the end have to be anonymous. Mm-hmm. They also have to be intact. So no double spending, for example, is a real concern. If you digitize payments, and you also want to lift it from the sphere of commercial entities that we have witnessed in the recent past to be volatile. And then we have a big problem as a society when these banks do stupid things and start collapsing. We have to bail them out, right? And this and the impacts on society have been huge for that problem.
So do you mean that getting to a digital official government-backed currency is a response to that, and therefore probably a good idea?
In part, yes, and I think it could be a good idea, but the details matter here.
Yeah, it depends on the implementation. I
Yes.
guess, how they're going to do that.
Yeah, that would be something for a deep dive on the deep dive. And unfortunately, well, our time is kind of depleted right now. Gentlemen, it's a complex issue. Complex to learn. It's very interesting to learn all the details about it. It's money to be made there, because it's so difficult. Write better software. I hear you're more or less say, Jeroen, fully understand how blockchain works before you start building software for it, and test it thoroughly, because then this may.
I would say two things. I think it's frivolous, and we're stepping things up to a level of complexity that we are not equipped to deal with. So this particular implementation error could have been avoided. I do not think we can avoid having implementation errors at all.
Food for thought. Thank you very much, gentlemen. Thank you for your contribution today. And to our viewers, thank you for tuning in with us. Like I said, there's infographics available in the show notes for you to review of everything we've talked about, and I hope you enjoyed it. If you like what you saw today, please like us, subscribe to our channel. It helps us spread the word, and it will also make sure that next time we have our next episode on Tuesday, you will get it into your own inbox automatically. And from the headquarters of Onto It, I thank you very much, and see you next time. Thank you for listening to Threat Talks, a podcast by Onto It Cybersecurity and AMS-IX. Did you like what you heard? Do you want to learn more? Follow Threat Talks to stay up to date on the topic of cybersecurity.